bringing you a review of the FTSE 100 for the day session, the 19th of February, which is a Thursday, and obviously giving you guidance or my interpretation of the events of today, and obviously what's going to happen going into tomorrow. Okay, right, so from an intermarket analysis perspective, what does Adil have to say? Okay, today was more of a whipsaw day, to be honest. I got whipsawed on the actual Aussie and the Kiwi, both for minus 40 on the long side and the short side, which is quite strange, very hard to read from that perspective. In terms of the currency market, mainly because we had Greece extension done, then Greece extension not done, the Germans rejecting, then news of it being done, then all of a sudden rejecting again, and so on and so forth. So basically, on the one hand, Greece is resolved, next hand Greece isn't resolved. One hand Greece is resolved, the next hand Greece isn't resolved. So basically, it's a game of cat and mouse, game of chicken that's being played at present, and certainly seems to be sources that are anonymous that claim one thing, and then all of a sudden a counter argument that claims another. So nothing but confusion, and how one can even base a trading decision on that. And especially given the fact that the Germans have rejected the proposal or the extension from the Greece's perspective, then that generally is indication of a of risk off. But yet the US markets, especially the Nasdaq, has gone and made a new high. The S&P 500 is holding the 2100 level, and the biotechs and the semis are certainly testing their resistance level, etc., etc. So it's very strange, very, very strange. I honestly can't make heads and tail of it as to what's happening. I'll try my best, obviously, at all times, but it's very, very hard to read between the lines as to what's happening. I mean, is it risk on? Is it risk off? What are the implications? Apparently, there's talk of a preparation for a Grexit. If Greece does leave the eurozone, unprecedented. How will the markets react, etc., etc. I mean, there's a theory that it'll actually be bullish for the euro, given the fact that you're cutting the canter off. So again, it's debatable. Okay, it's very, very hard. This is a time where technicals generally do tend to dictate to a certain degree, not to a large degree, because obviously they can, even technicals can get you whipsawed out. And this is the period where noise reaches its peak, and it does become very hard for you to differentiate. So again, we attempt our best. We put our stop losses in, and the stop losses are there to protect us, basically. Okay, right. From a data perspective, I mean, I'll bring up the economic data. I'll show you here. From an economic data perspective, basically, we had the obviously Chinese are off for their new year. We had Japanese data coming out better than expected, so that was a good sign. We had the trade balance come out 3 times better than expected, obviously with regards to exports. That was certainly a good sign. So potential risk on scenario. The only risk off scenario really overnight was number 1, the Greece deal being in doubt, and also number 2, the Greece deal was more or less confirmed because they had applied for the extension, etc., until obviously the Germans cast that to the side, and then it was risk off. But the main factor overnight was the fact that oil prices had sold off, and therefore I was stopped out my long FTSE position, and I subsequently went short, then I went long, and that's basically the situation with regards to the FTSE. So I certainly made it back on the short Aussie and the short FTSE, and then I went long on the Euro stocks afterwards, and then I'm actually short the Euro stocks overnight. So we'll see exactly how that plays out. Okay, so other than that, obviously the current account number didn't come in as good as expected, slightly lower. UK industrial trends data came out better than expected. The ECB minutes came out again. There was a 50-50 there, and it showed basically how close QE was actually voted in. And then we had the jobless claims data come out slightly better than expected. But then the continuous claims, obviously Feb, came out worse than expected. Basically, the leading indicators and the consumer confidence data slightly better than expected in terms of the Eurozone consumer confidence, but the leading indicators in the Philadelphia Fed manufacturing survey both came out worse than expected. Okay, so given the fact mainly the overriding principle right now and the bearish principle is the fact that the Germans have rejected. Okay, so it's all about the Germans rejecting. Okay, so that's my interpretation of events anyway. Okay, so my interpretation of events is the fact that the Germans have rejected, and if the Germans have rejected, then that literally means risk off from my perspective. Okay, because it shows that the Germans and the Greeks are certainly far apart, and certainly we've come this far, and yet there's still no compromise. Okay, so that certainly isn't a good sign. Okay, that's my interpretation anyway. So what does the fundamentals? Now that we know that the situation, where are the fundamentals and where are we going? So first of all, I'd like to start off with oil. Yes, we had a potential bounce on oil, which really has been factored into the FTSE, given the fact that it's at the 6890 region. Really, the question that we need to ask ourselves is: has oil made a base? From my perspective, it certainly hasn't, because the economic data, so the supply of oil or supply data with regards to oil certainly remains 3 times the amount or twice the amount, almost 5 times the amount with regards to the last night's data anyway. So basically the oversupply side, the oversupply argument is certainly there, regardless of the growth argument, which really isn't there if you look at the economic data overall. Okay, especially with regards to US data today was relatively weak. Okay, even though we've got a dovish Fed, yet still the oil price can't seem to rally. So again, that's not exactly a good sign. So you are looking at 49, sub 49 with regards to oil, given the fact that it's made a base at this 54, made a resistance level at 54. Unless there's some geopolitical event, etc., I can't see oil breaking out at 54 level. Okay, and you can clearly see that on the daily chart as well. So if I just bring up a daily chart of oil, in order for the FTSE really to propel higher, we do need to have oil moving higher as well. So that's going to be quite interesting as to that scenario or how that plays out. And as you can see here, we're still holding this resistance level, so we're in this sideways trading pattern. So whether or not we form a base is debatable as well, as long as we stay above the 48-49 level, and obviously we are holding this resistance here. Let me just draw this resistance for you correctly. I mean, we could break out either way really. We can either break lower or we can break higher. So this is your resistance zone here, which more or less coincides with previous resistance equals support. Okay, and this region here, as you can see, so you can just draw that here. So that's your last pivot support level, and that's exactly your resistance level at the moment. Right, so you're looking at 55, 54 resistance on the upside, and then obviously you've got this diagonal trend line that's certainly being respected as of now. Let me just draw this correctly. Bear with me. Okay, so that's basically where we are in terms of the trend line. If that breaks, then obviously it's a different scenario. If we can hold this base at 48, 49, and if you propel higher, then that will obviously take the FTSE 100 and the S&P 500 higher with it too. Okay. Right, so it's all about oil, number one, and obviously given the fact that the Germans have rejected this extension, so again that certainly comes into the equation. Okay, let's have a look at the daily chart first of all before I start to go into these smaller time frames. Okay, so daily chart, what we are observing at the moment, yes, we did break out, but this breakout seems to be relatively feeble. Okay, in terms of the actual conviction, especially given the fact that, like I said, oil is reversed. That isn't exactly a bullish pattern in terms of the markets going higher. So you can see this pattern here. Let me just draw this for you. Right, okay, so either you're looking at a rising contracting wedge pattern, which technically speaking is bearish, okay, or you're looking at a continuation of this a breakout, continuation, etc., of this resistance level here. Okay, so there are two zones I would like to focus on. So you got 6900 obviously resistance there, which really coincides with your weekly chart. obviously resistance as well. So whether or not we can propel and move higher above this, given the fact that the ongoing concerns with regards to Greece, etc., etc. Now, the only explanation that I'd like to give you, or give you additional commentary really with regards to the FTSE 100, is that the FTSE 250 has already broken out, as you can see here on the weekly chart, and even on the daily chart as well. So therefore, one would assume that the FTSE 100 needs to follow suit as well. Okay, especially given with regards to the actual comments with regards to keeping an eye on sterling strength yesterday by one of the BOE members. So that generally indicates a dovish stance if they are concerned about higher sterling, although they're still talking higher rates. So again, that's certainly contradictory and from that perspective. But we have to trade what we see, and at present, as you can see, the FTSE 250 is breaking out and continuing its move higher. The same pattern can be seen on the FTSE 350 as well. If I bring up the FTSE 350 and I show you the pattern of the FTSE 350 as well, you'll see that this is certainly breaking out. As you can see, daily chart is breaking out as well. Okay, a weekly chart is breaking out, and the daily chart obviously is broken out as well. But the only factor again with regards to the FTSE 350, given the fact that obviously we've broken out now, it's perfectly fine from that perspective, is that we have this rising contracting wedge pattern. And like I said, the way in which this wedge pattern will need to be perceived is the fact that the oil price dictates. So as we all know, based on technicals, a rising contracting pattern or wedge pattern generally indicates bearishness, and you're looking for a potential move lower. If that means the uncertainty regarding Greece, as we all know, given the fact that the Germans have obviously going into the weekend on a Friday, that they've rejected the proposal by Greece, and the uncertainty remains, so therefore fear, etc., etc., that can obviously lead to a sell-off as well. Now, the only other factor as well with regards to a bearish FTSE is the fact that real wages rose, okay, out of the economic data yesterday, and given the fact that the job market is strong, then one could argue if anybody is going to raise rates, then it's the US and the UK. And the UK, given the fact that you've got higher real wages moving higher, which really the BOE has stated that the drop in inflation at present is transitory, i.e. it's temporary, given the fact that the price of commodities have fallen. Okay, now that certainly is the case. So if it's transitory, that means that their perception and understanding is that inflation will remain low for the short term, but then once it starts to pick up, given the fact that real wages are rising and commodities start to pick up on economic strength, etc., etc., then that will obviously lead to higher inflation down the road, and they want to be ahead of the curve. Hence the reason why we had statements from Bullard. I mean, we had I'll read the following statements out today from Mr. Bullard. Okay, this is towards the US session. Fed's Bullard removing patient at March meeting would allow but not obligate Fed to raise rates in June. So again, they're talking rate rises. Fed's Bullard worried that markets could view Fed as falling behind curve on rate hikes. Fed's Bullard mismatch between markets and Fed's view of rate path needs to be reconciled sooner or later. Okay, so again, that's all hawkish speech, especially with regards to the BOE as well. If they are saying that inflation is going to drop in the short term, but then eventually will pick up, again, that's going to be debatable whether you interpret that as hawkish or dovish. Okay, very important. Now, obviously, given the fact that the Fed is remaining dovish, or is claims to be, or proposes to be dovish, and their interpretation is dovish, given the fact that they kept the word patience, and cited international developments, i.e. such as Greece, that could hurt sentiment, and they want to prevent a market sell-off. So again, it's very debatable. I mean, what's going to happen with regards to Greece? Does anybody know? Not really. The last 24 hours will prove that to you. One minute you have an extension, next minute you don't. This is denied, that's accepted, and another rumour comes out, that's denied, then it's accepted. How on earth do you base your trading decisions on something like that? So it's constantly fluid and changing. But for now, like I said, keep an eye on this rising contracting wedge pattern on the FTSE, and also, as you know, with regards to the FTSE 100. The FTSE 250, like I said, is all about the lower sterling. And if they are talking about and observing with regards to the rates or the FX rate, obviously if they are going to maintain that, and given the fact that inflation is going to be transitory in the meantime, that obviously should help the export side of the equation. and also given the fact that you've got the oil price pumping higher as well. Okay, so let's go back to our FTSE 100. Okay, so now that's the fact on the daily chart. So again, you've got this rising contracting wedge pattern. You can call that a doji candle, abandoned baby, call it whatever you want in terms of your technicals. Certainly does indicate exhaustion at resistance. Now the 60-minute chart is very interesting because you have a H&S formation. Your left shoulder here, the head's at the 6920, your neckline is around the 6850 55 level. You're looking at a 70-point drop, so therefore you're looking at a sub 6760 support level, 6780 support level, etc. So that's going to be very, very interesting, okay, going forward. Now, the 10-minute chart at the moment, I don't think it's certainly worth observing. It's all about the 60-minute and that right shoulder. If we can hold that right shoulder, i.e. if we maintain the fib 75%, so if the market remains below 6905, remember that level, or 6900, then the right shoulder certainly remains in force, and then therefore we go lower. If we take out that 6900, 6905, then we just short squeeze higher to new highs. Now another factor as well, and this is something that I forgot, was with regards to the incident regarding the jets. Unacceptable. Moscow rejects UK Defence Secretary claims on Putin posting real and present danger, or posing real present danger. So again, geopolitical standoff there as well. So that's interesting. Okay, so that's the FTSE 100. Now let's try and break this down in terms of sectors. Okay, so pharmaceuticals, you have, like I said, double top is in. Looking like we are consolidating there for the next move lower. Banks, again, looks like the triple top resistance is in, so again nothing really propelling that higher. Oil and gas, obviously given the fact that the market sold off, oil prices sold off, down to the $50 level before bouncing $2. Again, that's interesting, but given the fact that the oil market remains oversupplied, this looks like as H&S obviously will play out, and then we are looking to potentially move lower and close this cap down here at 7,000, which will ultimately take the FTSE 100 down with it as well. Okay, retail sector is the standout. That certainly needs to be respected, as you can see there. Certainly propelling higher highs and higher lows. Any signs of weakness in with regards to the retail market or retail sector, again, that will force the FTSE 100 lower. Okay, so certainly respect needs to be given when it's due. Okay, so BP itself, we bounced and held off the 200 MA, but again it seems to be consolidating sideways. Either whether it wants to break out or not is debatable, although you do have to pay respect to the inverted head and shoulders on BP. Okay, so that indicating to you you are going to rise, and obviously that's already been shown in the movement in the oil price overnight. Obviously oil has bounced from $50 to 52, and that should be reflected in BP tomorrow. Once we get to cap fill, this resistance at 450, 451, then this move more or less is over. You've got a head at 440, neckline is at 445, looking at a 5-point move, takes you to 450. Once we get to 450, that should be an indication that you can go ahead. Well, I can't say you and myself, indication for me to short the FTSE 100. Okay, that's my interpretation of events there. Same thing with Roy Dutch Shell. Again, as you can see here, it's certainly indicating weakness. We might have a bounce, but this bounce will be transitory. And given the fact that we've got an unfilled gap below here, looks like it wants to close that level at 2060, which again, like I said, is bearish for the FTSE 100. Now, what's interesting here as well is this is a chart of BHP Billiton. Certainly looks like it's exhausting and it wants to move lower now. This is next one is the mobile and telecom sector. This was sold off quite aggressively yesterday with regards to the Vodafone drop. This looks like it's consolidating. The next move certainly seems to be lower as well. Okay, hotel, travel and leisure looks like it's doing good, but we are into resistance, so that certainly needs to be taken into account. The mining stocks, again, mining index is same as BHP Billiton. You have a H&S formation. That exactly isn't a good sign. So your left shoulder's there, you've got the head looking for a right shoulder, then obviously down we go. Yeah, okay, so very interesting with regards to the movements there. Okay, so that's basically my interpretation, and as you can see here, Vodafone's a feeble bounce back into that previous support equal resistance zone and potentially moving lower. So overall this isn't looking good from my perspective. If you're a bull, I would certainly be concerned. Okay, 10-minute chart, see if I can decipher the 10-minute chart for you, for those of you that are trading tomorrow. Look, highlight any key support resistance levels for you to watch out for. My chart is it's a right technical mess at the moment. Okay, Here goes. Okay, so here we go. Okay, so levels to watch out for tomorrow. Okay, so the market failed to make a high intraday, so that's obviously a weak sign. Okay, we're obviously holding this level at 6,900. Again, that coincides with the right shoulder, which I said to you before, with regards to the fib 75% resistance. So since 6,900 will be solid resistance. Now, the pattern that I can see here, this is your left shoulder, this is your head, and obviously this is your right shoulder here, and the market wants to move lower. That's basically the pattern that I can see on the FTSE 100 straight away, and that exactly isn't a good sign. Okay, potential support at 6870, 6860 region, potential resistance up here. If the market does break through, gets to that 6907. After 6907, I think we all know it's 6920. We'll see exactly what happens with regards to the market going up there. Okay, but for now, you are looking of your pivot at 6900, 6907. Again, that will act as resistance and looking for potential support around the 6960, 6950 region on the FTSE 100. But bear in mind, it has got a potential H&S formation. Okay, so again, that's not exactly a bullish sign. Okay, folks, so that's how I'm interpreting the FTSE 100. So certainly indicating sideways potential strong arguments for a sell-off going into tomorrow, especially if the Germans keep rejecting the bill and the uncertainty rises going into the weekend. Then we should certainly see a sell-off. Okay, folks. So risk on, risk off, wax on.